Hello friends, the reason for making this video is to remind everyone about one industry which is very important for growth of any company nowadays and any economy, any growing economy. And that sector, I think you must have guessed it by now, it is IT, which is information technology. And right now this section is not doing that great because of the slowdown news in US and Europe. And since most of our work that our IT company in India do, they work for US and Europe. So that's the reason that you see that the share prices of these IT industry, even after giving good results, are down, which again is a very good opportunity for long term, because this is again a short term problem. The result of the IT companies is not bad at all. It's very good. They are growing at a healthy rate. Their revenue is still growing, but the market is beating down these stocks just because of this temporary issue, which as an investor we should take advantage of and we should start investing. IT is one industry which has become like a necessity for any company to grow right now in this digital world. So let's look at some of the shares in the IT sector and see at what discount they are available and what are their support levels. Our first company is TCS, which I'm sure needs no introduction. It is the second largest company in India and the second largest IT company in the world. And it is owned by one of the renowned group, which is Tata. Right now you'll see the share is trading at around 3300 level and it is down around 17% from its 52-week high. Now let's look at the numbers and you'll see that the numbers have been fine. There have been no problem with the numbers, but still you are getting the shares at a very discounted price. So let me just expand this and you'll see that in the last quarters, it has been continuously expanding or increasing its sales from 16 to 18%, and that has been the case in this quarter as well. So if you see September 2022, the sales increased by 18% and the OPM was at 26, which is a slight dip from around 28, 27 level, but still the revenue is increasing, which means there is no impact on the business as such. If we'll see the P&L, and in this also you will see that the company is continuously growing. So you'll see from March 18, 32,000 was the operating profit, and if we'll go on March 29, 39,000, then 42, then 46, then March 2022 it was 53, and in the last 12 trailing months it's around 55. So there's a continuous increase. I don't see a problem in the results at all, just a minor dip in the OPM. I don't see any slowdown in the results because you'll see there's nothing drastic which is changing in the quarterly results, just a minor dip in the OPM, although the expectation is that in the next coming quarter there can be a dip and the profit margins and the profit may go down. But even if it goes down, then again it will be a temporary situation, because once the inflation problem is sorted in US, you will not get these companies at this rate. Now is the time to invest in these companies, and these are giants of IT. Well, in stock market there is no such word as 100% risk free, but the closest to risk-free what you can get in Indian stock market is TCS, Infosys, these kind of company. So when you are getting a chance, you should definitely think about it. Think about long term, not short term. Think about 5 years, 10 years. Do you think that the IT sector will not grow? Do you think that the inflation problem will not go away in few years time? Do you think that the world will stop growing, India will stop growing? If the answer is yes, then obviously you should refrain from investing in IT company. But if the answer is no, then this, my dear, this is the chance. This is the chance to invest and hold for long term. And if you look at the return profile is also very solid. So this company without any major risk has compounded your stock, compounded your wealth in last 5 years, 10 years, and even beyond that. So you can definitely think about this company. Let's look at the chart as well. So this is the chart of TCS, and you'll see that from its top around 4,000 levels, it was down to 3,000. So, and 3,000 was its earlier support as well, from which it went back. So it's the same level the company went till 3,000 level. So 3,000 was an amazing level to get into the stock. It was available at a very good discount. Right now it has moved up from 3,000 levels, around 10%. It has moved up, but still the discount is there. If you don't have this share, you can still add little quantity and wait. If the market give more opportunity and if it tests 3,000 level again, then it will be a golden opportunity to enter into the stock once again. So keep a track of this stock. This is also one of the company which can be made as a core or an anchor company for your portfolio, because these are companies which will compound your wealth at very low risk, and even if it goes down, you can be rest assured that these company will go back up after some years, but you just have to give them time. At least 5 years you'll have to give these companies. Minimum long-term investment has to be of 5 years. The more time you give to these company, the more wealth they will create for you. Our second company is Infosys, and Infosys story is also pretty much the same. You will see that it is right now available at an 18% discount, and it is also one of the renowned IT company in India and in the world. If you'll see the quarterly result, you will see that this company also has been growing with more than 20% growth in its sales. So here you can see that, and here also there is a dip in the OPM. So in September the OPM was 26 and now it is 24. So there's a 2% dip in the OPM. And if you will see the return profile, it is also similar to TCS. In last 10 years it has given 18%, last 5 years it has given 27%, last 3 years it has given 31%, and in last 1 year it has given a minus return of 10%, which again is an opportunity, not at all a time to sell these kind of shares. one interesting thing that you'll notice in Infosys is that the promoter holdings have increased. So promoter themselves have increased the holding in their company because they are confident about the company. They saw that the price was available at a very discounted price, so they invested, they purchased few shares, and they have increased their holding from 13% to 15.16%. This can be treated as a positive sign for us as an investor also, because we may just have few shares for Infosys, but the promoters have thousands of shares. So if the company is in trouble, they would be the first person to know about it. They would be the first person to get out of any stock. But in this case, you see that the promoters are confident about the company. They are increasing their stake, and you'll see that the FI is also doing the same thing. From June 31 to they have increased it to 36%. For DI, it may not be an accurate data because some portion of these holdings which was mentioned earlier in the public sector under this have moved under DI. So this is what it is showing. It is only a temporary fall which you are seeing right now, and after 3-5 years nobody will remember about this. But if we will not invest now, one thing is for sure, that we will definitely regret about it, because IT right now is an essential part of any growing company, any growing economy. Now let's look at the chart as well. So this chart is also similar to what we saw for TCS. So last time it took support around this level, around 1400 level, but this time it went past 1400 and it was available around 1350, which was a very good opportunity to invest. But still, this share is still available at a good discount of around 17-18%, which is not a bad discount at all. You can start creating your holding in this company. If we get a chance again and if we see a dip again in this stock, then you can accumulate more. Our third company is L&T Infotech, and you'll see that it is currently available at a discount of around 35%, which is a good discount. And L&T, after the merger with Mindtree, will become the 5th largest IT company of India. And the way that L&T has been growing, I think after some time it will replace Wipro to become the 4th largest IT company in India. And the reason why I'm saying is because of the growth. So you will see that the growth in the sales numbers. So the sales for LTI has been growing at a rate of around 30%. So you would have seen that TCS sales is growing around 18%, Infosys around 20%, and LTI around 30%. So out of these three, LTI is the fastest growing IT company that we currently have. And LTI is also part of a very renowned group, which is L&T. Now let's look at the chart for LTI. This is the chart for LTI, and you'll see that from its highest level, which was around 7500, it came down to around 4000 levels and even 3500 at one time. But 4000 is where it took the support, and after that the next time it did not went down till 4000. You must have seen in TCS and Infosys that they retested their previous support, which was around 3000 rupees and around 1400 rupees. But here you'll see that the first support that it made was around 4000, but the second time when the market dipped, it took support at around 4500 and it maintained its support. But if market gives an opportunity, and you can definitely think about using that opportunity. So the reason for including these three IT share in this video was, if you want to invest in the IT sector, which I think you should, but if final call is yours, then you can look into these three companies, and you can also make a pair of maybe either one from TCS and Infosys, which will be less risky company, but the return will be around 20 level. And you can have one more, which is the fastest growing IT company, which also belongs to a renowned group, which will give you a little more return than Infosys and TCS, but will also fall more than TCS and Infosys. So based on your holding capacity, based on your risk profile, you can decide which company you want to go with, whether you want to go with either TCS completely or Infosys completely, or you want to do a combination of maybe TCS and LTI or Infosys and LTI. You can decide for your own. But sector wise, I think this is a sector which should be there in the portfolio, which should be part of your portfolio, which should take at least 10% of your portfolio, because this is one sector which is a necessity. And before closing this video, I also wanted to share one article that I was reading. So the article says that there is currently 3.5 trillion of Western money which is invested in Chinese market, and some portion of that money will definitely flow into India now. So the money will start moving from China to India because of the recent developments that are happening. You'll see that India is coming out to be a +1 for China, and even if out of this 3.5 trillion only 1/5 moves to India, that will lead to doubling of the FII's investment in India. So you can just imagine, if even the 1/5 of that 3.5 trillion start coming to India, what will happen to the Indian stock market? So I am very, very optimistic about India and the growth story. If you also think the same, then this is the right time to be in the stock market. Invest in share market, be with good companies, hold them for long term. They will definitely give you good returns. So that's it in this video. We'll meet in the next video with some more information. Thank you.